topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Good morning. It is a great morning. Had a great weekend, a great Father's Day. Got to actually spend some time with the grandkids, and then we get back at it here Monday morning, talking about your favorite topic, taxes, bookkeeping, tax planning. Hey, and today, that's really what this is about. Can you believe we're already into June? Almost halfway through 2025. Time flies when you're having fun. Time seems to fly as you get older and moving quicker. But that's a story for another day. Here we're talking about taxes. We're talking about tax planning, mid-year tax planning. This is an excellent opportunity for you to actually review your financial situation, make adjustments, potentially help minimize your tax liability for this year. And it's a great way to do it. The first thing we tell people to do, if you haven't done it already, and you should always start from the beginning of the year because it's much simpler, is first, make sure you organize all your tax records. Create a system that keeps all the important information together. You can use you can use a software out there to electronically store things and store paper documents and clearly label all your folders. In our situation, we have OneDrive out there, or even Google Drive out there, where we store PDFs of receipts, and we organize it based on year, based on categories. And then because we do run business, and then we run farm and ranch, and then we have things that happen in our personal life, we have those three buckets, and we put everything into each one of those buckets. So, if it applies to the business, it's, been categorized, expensed, thrown through bookkeeping, and we know what all the expenses are there. If it's running the farm and the ranch, then it goes into that bucket, whether it's buying a new calf, leasing a bull, upgrading fencing, fixing water lines, whatever it may be, the chickens, donkeys, pigs, you name it, it's got its bucket within that farm and ranch folder, and then all the personal stuff that we do as well. So we find a way to keep things organized. And like I said, it's easier to do it from the first of the year and continue to do it, all year long, whether you're using a spreadsheet, whether you're using a bookkeeping software, whatever it may be, it's about organization and keeping your life and the items and things that are happening in your life completely organized. Take a look at your filing status. Has your filing status changed? Did you get married? Did you get divorced? Did you have new dependents? Maybe you had new kids. Maybe you adopted or are caring for your grandkids. All those things can and do affect your taxes. So, you can identify how you're going to file, whether it's, married filing joint, married filing separate, head of household, Or maybe you're now just single again. So all those can have an impact on your taxes. And when those have an impact on your taxes, then you might want to go back and adjust your W-4 if you're an employee. If you're not an employee and you're self-employed, maybe an owner-operator, truck driver, maybe you run a small business, maybe you're a consultant, then you might want to relook at your estimated taxes. By the way, June 16th, your second estimated tax payment is due today. So, if you've been working with us and you got your estimated taxes to pay, make sure you get those estimated taxes paid today. So, get in there and make those estimated tax payments. So, changes in life, marriage, divorce, birth, death, all affect your personal situation, your filing status, eligibility to claim certain credits and claim certain deductions. When all those are impacting your life for taxes, it's a time for a financial review and see where you're at and what's changed. Best to sit down and work with an enrolled agent or somebody in our office to figure out what your estimated taxes should be. But you can also, as the IRS says, go to the irs.gov and you can use the IRS tax withholding estimator. And you can utilize their online tool. I'm not going to say how accurate it is or inaccurate it is. That's for you to choose, and especially if you're changing your withholdings. So, when you are sitting down and you're looking at what's impacting your life, make sure that you've correlated it over to what's going to impact your taxes for the year, for federal and state. Hey, maybe you've changed your address and you've moved. It's a good idea to keep the IRS up to date on your address. Notify the Postal Service, notify the IRS as well. You can complete the Form 8822, which is the change of address form with the IRS, so that they have the correct address. So just in case you get one of those fun grams from the IRS saying, hey, you made a mistake on your tax return, the IRS knows where to mail that to. Or worse yet, you get selected for that dreaded audit. Or they just made changes to your return because you made a mistake or left the W-2 off, 1099-R off, whichever it is. But at least you're getting notified so you can make the corrections or figure out what went wrong. You should also report name changes to Social Security Administration. Get your Social Security card corrected. You should make all these changes as soon as possible. And since you're sitting here, mid-year looking at everything that has transpired. So if you're a newlywed, get those addresses changed with the IRS. Get your name changed. If you've changed your name when you got married, get it changed with Social Security Administration. Make sure if you're working with a tax preparer, they know that you've changed it, because when you go to e-file, if you've changed your name, it's going to get kicked out. If you didn't change your name and you're going to a preparer, let them know what name is on your Social Security card as well. And, I always say this, better late than never. If you haven't started saving for retirement, start now. Make the changes. Every dollar that you can put into a retirement plan is money saved for your future. And the longer you have, the more that money will be worth out there in the future. As I told my son when he first started working, he's like, Dad, I can't afford to put any money into a retirement plan. I sat down with my son and I looked at him and I went, this is your first job, right? Yes. So you really don't know what your actual take home pay is going to be until you get that first check, correct? Well, yeah, we could estimate, but here, the company you're working for does a 401k match, and they do it up to 5%. So take 5%, put it into your 401k. Then they match that same 5%. Now, when you get your first check, it's going to be painful. You're going to notice it because it'll be the first time getting out of college and working a job for a good amount of money that you're going to actually see the impact of federal, Social Security, and Medicare taxes coming out of your check. But you're also going to see the 401k that comes out as well, that you've just started saving for retirement. Now, after that first check, you're never going to notice it again because I can almost guarantee you're going to be like a lot of other people that you don't look at your check very much. You look at what went into your bank account. You make sure the deposit was there, but you don't make sure of anything else that was on your pay stub. Now you don't feel it anymore. It's not as painful, and you've got an automatic savings program for you. Hey, it's a great way to start saving, and it's a great way for you to ignore what the net is coming out of your paycheck. Hey, when we come back after this break, we're going to talk about maximizing deductions and credits. Yeah, we're talking about mid-year tax planning, and that's part of it. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Oh, welcome back. In our next segment, we're going to talk about business tax planning for small business owner-operators, truck drivers, over-the-road truckers, you name it. It's going to apply to them. So make sure you're staying tuned in. And so the next segment is going to be about that. But hey, this segment, we're talking about maximizing your deductions and credits and other tax planning on your personal side. So if you're thinking you might be itemizing this year, that's a big hurdle to get over with this larger standard deduction. But with mortgage interest rates as high as they have been over the last couple of years, and if you've bought a new house, you definitely feel it. You might be very close to itemizing. So, part of this is being strategic about it. Since your mortgage interest is going to be so high, and then your state and local income taxes, property taxes might be pretty high. Your charitable contributions could be high enough, and you may be getting over that. So you might look at bunching deductions. Now, every year we talk to people about bunching deductions. Now, we know state and local taxes are limited to $10,000. But if your mortgage interest rate is pretty high and you have a large purchase, that has large mortgage interest and you have that expense, you can bunch with charitable contributions and maybe make more charitable contributions one year. Or if your property taxes and your local income taxes are maybe only 5 or 6,000 a year, then maybe you look at 1 year paying them in January of and then that same year paying them in December. So therefore you've bunched your property taxes or your state and local taxes into 1 year, and you got to that 10,000, and you're able to now itemize and get more for your charitable contributions. Maybe you're retired and you're taking money out of your IRAs. Instead of taking the money out and then giving it to charity, you can use your RMDs to give directly to a charity and make those non-taxable. So there's a lot of things that you can do to help you lower your taxes pretty much at any age that is out there. It's figuring out how to use the tax system to your benefit. And that's where sometimes using a good preparer to do this really helps you in figuring out the best way to get the tax deductions that you need to save money on taxes. What tax credits can you get as well? Such as the child tax credit. Maybe it is the improvements to your home, energy efficiency credits that are out there. Maybe you have solar credits. Maybe at times there's credits on purchasing an electronic vehicle if that's what you're looking for. Maybe it's even, as we've discussed in the previous segment, retirement contributions. Should you increase your contributions to your 401k, your IRA, or other pre-tax retirement accounts to lower your taxable income? So if you're a teacher, maybe it's using the 403Bs that are offered through the school districts to help reduce your income and reduce the taxes and save for retirement out there. I know a lot of times, maybe you're a dual income family and you're trying to live off of one income and save the other. So, maybe you can maximize 401ks or 403Bs or other retirement savings out there to create that wealth for you in the future. Other items that you can look at are health savings accounts, HSAs. So if your medical plan is eligible and you're eligible to contribute to an HSA for tax-free growth, tax-free withdrawals for qualified medical expenses, great way to put money away. And then when you use it and you do have the medical expenses and you use it out of your HSA account, it's a tax-free withdrawal to help meet your deductibles, co-pays, and so forth and so on. Really nice way to put money away pre-tax. And so when I speak at different seminars around the country and we talk about how to minimize your tax, we always talk about how to make sure that you take from what is after-tax dollars and money that you spend after you pay your taxes on it and put it into money that you spend or save pre-tax before it gets taxed. HSAs is a good way to do that. Sometimes the flexible spending arrangements are really good. But in a FSA, flexible spending arrangement, you got to use that money before the end of the year. So things like daycare, if your company offers being able to take money and put it aside before tax, or even sometimes meeting deductibles on insurance and stuff, you have to use that money before the end of the year. So it's a good way to do it, but it's a use it or lose it plan. So you kind of got to watch how you do it. Now, if you're investing, sometimes you've got to look at managing your investment income. When the market is going up and your account is being successful, you may have some unharvested, unrealized losses. So you can take those losses to help offset those realized gains and reduce your taxable income. There is an art to this. And so, you've kind of got to look at it. I know I've got some losses in my account I hate taking. But if my tax rate's high enough, then maybe I've got to look at taking those losses to offset those realized gains that I've had in my investment accounts so that I can reduce those taxes. It's something to sit down and look at. Plan your year. Plan how you want to do it. You may not want to do it today, but maybe you want to look at it and do it before the end of the year. Maybe your income is where maybe you should start considering making Roth conversions. We have some tax guys, clients of ours, who are now have quite a bit of money into a 401k or IRA. That's a regular account, and they want to start looking at converting it to a Roth. Now, a Roth IRA grows, and when you distribute that money, there's no tax on it. So it's advantageous depending on where your tax rate is going to be in the future. But if your future tax rates are expected to be higher, then you should consider converting some of your traditional IRA or traditional 401k over to a Roth IRA or the Roth 401k, especially when you're paying the conversion taxes. Now could be very advantageous here in a lower tax bracket out there. But that takes a little bit of estate and a lot of tax planning to make sure you're doing this correctly. Maybe you do have an estate and you need to start planning what's going to happen to it. Maybe that living trust is right for you. Maybe just a will is correct for you. Maybe you need to sit down with a trust or estate planning attorney and determine the pros and cons of living trusts and other estate planning activities, especially maybe you own land that is going up in value or homes that are going up in value, or you want to make sure that your family is set and can avoid, like we have in Texas, probate. And you might want to avoid probate, so you use that living trust that's out there. Whatever you decide to do, I always strongly recommend seek professional advice. Talk to a tax professional. Your tax advisor is going to provide personalized guidance tailored to your needs, your financial situation, and help you identify, tax saving opportunities. But you've got to act as well. Don't just listen to the advice. Take advantage of the advice and do the things that they're telling you to do. Going through this mid-year tax planning helps you avoid surprises. Maximize your savings, helps you adapt to changes, reduce stress at tax time. But be proactive in your tax situation. Implement some of the strategies so you can improve your financial health. Hey, we're going to get into business taxes, owner-operator taxes, trucking taxes, and we're going to do that right after this break. We'll be right back.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Hey, speaking of Trucker Tax Tools, man, we had a great week last week. Probably one of the greatest weeks we've had, this year. We're always helping truckers, and we're always signing new clients up for bookkeeping and taxes, new low rates. I don't know how long the special is going to keep going on for, but bookkeeping at $25 a week, you can't beat it. Give us a call. Let us talk about what we do for owner operators, truckers all across the country. You don't have to be local to us in any way, shape, or form. Our program is developed around you, the small business owner, the owner operator, over the road trucker that needs financial freedom, needs the freedom from doing bookkeeping and taxes, and we can help. That's what we're here to do. Give us a call today, 877-966-2477. Again, 877-966-2477. Let us put the program together for you. Let us show us what we can do for you. We were helping a new client figure out how to transfer his charter from New Jersey to Florida, sending him some information out and helping him along the way. It's great to help new clients out there. Other truckers that we've gotten started helping with their bookkeeping, getting them on the right track and keeping them organized. And, that's what it's all about. We started from helping truckers when they had IRS problems and dealing with the IRS and putting a solution in place, to save them from their tax debts, unfiled returns, money that was owed, or even IRS audits. And out of that grew Trucker Tax Tools, to where we help truckers with their bookkeeping and taxes. We had many truckers coming to us and say, hey, can't you just now pick up our bookkeeping and taxes? So we had to do this through this new entity. It's all about trucking and Trucker Tax Tools. Go to truckertaxtools.com, or again, call us at 877-966-2477. Let us get started, working for you. We were going to talk about, small businesses. Small businesses, you guys, subject to various taxes, both federal and state. And it really all comes down to, depending on your structure, your activities, what do you do in business? But, when it comes down to it, it's taxes, and taxes. I mean, federal, state, you name it, local, city, everybody wants a piece of what you do. And so, when you're an owner operator or a small business, you got to have to file your federal income tax, and you're going to pay federal income tax. Most businesses must file an annual tax returns, paying their taxes on profits after deducting your expenses, deductions, exemptions, credits, and then, if you're a C Corp, then you're going to pay your flat tax rate, which is about 21% as of 2025. And then if you're C Corp and you pass dividends out, then the shareholders that receive the dividends they're going to pay tax on the dividends. So you have double taxation. May not be the best way to go. Or maybe you set up your LLC and you're a single member and you're filing your return on the Schedule C. Well, now you also have self-employment tax on top of that. So, if you operate as a sole proprietor or an independent contractor or single member LLC, you're going to need to pay self-employment tax to cover Social Security and Medicare taxes. If you've taken that entity and made it into, let's say, an S Corp, you're now going to have payroll taxes because you, as the employee of the business, as the owner working in the business and have to have a reasonable salary, you're going to have payroll and you're going to pay federal income tax. You're going to pay Social Security, Medicare. You're going to pay the employer half of Social Security and Medicare. You're going to pay the employee half of Social Security and Medicare. And then you're going to pay the federal income tax as well. Now, with an employee, you may have state workers' compensation or unemployment insurance that you also have to pay. Boy, these are stacking up. And who said business never pays taxes? It seems like it's taxes, 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 taxes. Now you're a business owner. Now you got to make sure you make your estimated tax payments. It's crazy. Again, it's taxes. Hey, what's today? Estimated tax payment day. Make your estimated taxes. Make that payment today. They're due today. If you are a C Corp, you may have estimated taxes as well for your business. Maybe you're a multi-member LLC, and now you file a partnership return. Well, it's a pass-through. So if you don't have employees, not going to have employment taxes. Matter of fact, you as the business owner working in your partnership are not going to be on payroll, but you're going to receive what we call guaranteed payments for the work you do for the business. Those guaranteed payments are going to be subject to tax, self-employment taxes on your personal return that you pay through your estimated tax payments. Again, due today. Taxes continue to accumulate. Now, depending on the type of business, if you're an owner or operator, you're familiar with excise taxes. So excise taxes are also applied to other business activities such as manufacturing or selling certain types of products, operating certain types of businesses, or using certain type of equipment. Semi-truck. Make sure you file your 2290 taxes. Those are coming up due here really soon if you're an owner or operator. See, people don't understand running a small business. Running a small business means you pay more taxes, have more responsibility. See, that responsibility doesn't stop just with yourself. You are no longer responsible for one. Now, if you're a contractor, maybe it's just you working for it and you're responsible for you, your business, and then your personal taxes. See how that goes? Not just one. You're responsible for the entity. You're then responsible for income taxes, self-employment taxes. So it becomes two. Now you start in small business and you're growing. You're not responsible for one anymore or two anymore. You're now responsible for each and every one of those employees that now have become like family. You want to take care of them. You got to be responsible to make sure not only do you give them their paycheck on the payday, but making sure that your business isn't going to be in financial debt or hardship. You got to make those tax payments for the payroll taxes. Yes, the federal withholding, the amount you withheld from their check, the Social Security and Medicare that you withheld from their check, the matching Social Security and Medicare that the company has to pay, the state unemployment insurance that the company has to pay, the federal income taxes the company would be responsible to pay. Burden has become great for you. You need to be making sure that you, as the business owner, are dotting your I's, crossing your T's, and making the taxes and tax payments that you're required to make, including your state and local taxes, state and local income tax, sales tax, employment tax, workers' compensation, property taxes, all of the burden that are on you. Hey, Mike, I appreciate the question. As a matter of fact, it's going to bring us to our next topic after the break, which is what can we do for tax planning for businesses out there, owner operators? Mike, we're going to address that question right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, I like the message here, Albert. Thank you. Happy Father's Day to all the fathers out there. I know yesterday was Father's Day, so I hope you guys, all fathers and dads out there, had a wonderful Father's Day, whether it's, with your kids, your grandkids. Hope you enjoyed the day. We're talking about tax planning mid-year. Great time to look at this and look at tax planning, both on the individual and the business level. One of the places we start looking for businesses and tax planning, and Mike, thanks for the question about tax planning for businesses, is we start looking at your business structure. How are you structured? Are you a sole proprietorship? Are you a partnership? Are you an LLC? Are you a corporation? All those are going to determine how you're paying tax each and every year. And that structure can also impact the amount of tax that you're going to pay. See, a sole proprietor, depending on how much money you're making, you're going to be paying Social Security and Medicare on the whole bottom line of your business. So if you were to make $100,000 a year, you're going to pay 15.3% on that for Social Security and Medicare right off the top. If you are a partnership, as we discussed, it depends on how you set your guaranteed payments, and that might be manipulated to the quality and the level of work that you're providing and services you're providing to the partnership to make it a reasonable salary. LLC could be taxed as a single member, could be taxed as a partnership, could be taxed as a S corp. Depending on how you filed for your employer identification number, and then if you filed all the right paperwork to elect S corp status or something else, those can be used to work at lowering the amount of Social Security and Medicare taxes that you're going to pay. Or maybe you're a C corp and maybe you shouldn't be, and you're now paying taxes and then double taxes and then payroll taxes. See, that business structure out there can have a huge impact. Great time to sit down and do an analysis with your tax professional to make a determination which is the right structure for you and how to improve your tax situation within the structure that you've chosen, or choose a new structure out there. Looking at your business, what tax deductions and credits that you should be able to take advantage of. There are various tax deductions that help reduce your tax burdens. So, you got to look at all the deductible expenses out there, whether it's advertising, employee wages, office supplies, business travel, professional services. Um, all of that is available out there. And you got to look at all those deductions and find all the credits and everything that you can take to help you reduce your taxes. Hey, we got a great question here from Kyle. Do you fill out S Corp paper once, or is it done every year for taxes? Well, the S Corp election that you make on Form 2553 is filed one time. The IRS has to accept it. It's got to be filed timely, and then for the IRS to accept for the time period you're asking to start the S Corp. But once the S Corp election has been made, you will file every single year, whether you have income or not, 1120S, which is the tax return for the S Corp. So even if your S Corp is not generating any income or having any expenses, maybe dormant, the IRS is actually expecting you to still file a tax return for each and every year that's out there. And if you don't, they can and do penalize you for non-compliance. So the election is made one time, but you continue to file the 1120S, the corporate tax return, every single year. So something else you want to make sure that you're doing for your business and helping with your tax plannings and filings is keep meticulous records. Maintain accurate records of your income and expenses to support your tax filings and every deduction that's out there. Use a bookkeeping service. Bookkeeping services and professional services like ours here at Trucker Tax Tools are tax deductible. It's a pre-tax expense. So you're not paying after tax. You get the deduction for what you pay for our services to help save you money on your taxes. So, use a service like us. And matter of fact, the great low plan that we're offering right now for bookkeeping for truckers, owner operators out there at $25 a week, call us here at 877-966-2477. Let's get started here right away. Let's save you money and find every deduction that's out there. And I tell you, if you're running a small business, get professional assistance, whether it's from us here, Trucker Tax Tools, Taxation Solutions, Tax Relief. Hire a tax consultant, a tax professional for guidance on, strategies, tax savings, business structure, and filing. And be aware of every deadline that you are going to encounter as a business person. Missing deadlines causes penalties, causes interest, and you don't want to miss those deadlines. Now, hey, we know we operate across the United States. We have clients in almost every state in this country. Long story short, for a long time didn't have a client in Hawaii. I got to take a vacation out in Hawaii. And while I was in Hawaii, we gained 3 new clients in Hawaii. So, we are nationwide business out here, both taxationsolutions.net and truckertaxtools.com. Operate across the whole U.S. We're out here helping businesses manage regulations. And, the state tax rates can vary and can change from state to state. There's some great states out there that don't have state income tax. I always recommend those states over states that are paying taxes, but it's all your choice. Beth, hey, good question here. We're running short on time. You're saying that even if a company is not running, took a loss, or just a startup phase, that it's practically dormant, you still have to file paper and work taxes? Absolutely. If you are an S Corp, you are still required to file that 1120S. So when you filed and received your S Corp election and you receive the letter, it tells you when you've got to first file, and then you've got to continue to file that S Corp return, even if it's zeros, if you want to keep that company open. If you're going to be dormant or you're not going to operate, it's sometimes advisable just to close the business down and set up a new business or keep it open with the state. And when you're ready to go back to running the business, get a employer identification number and start over. But you've got to look at state regulations as well. Sometimes you got to talk to an attorney to determine what's the right thing for you to do, for you and your business. But the one thing I can say, when you run a business, you really need to take the time to go through the structure and then go through your bookkeeping. You can use our recommended tax software, our bookkeeping software that we use, Xero. If you come to us, we like Xero. Is one of the better softwares out there. It's actually Xero, Xero. Over QuickBooks and over some of the other softwares that you can be using out there. We like to use it in our practice because it allows us to do things a little bit easier, and it is all online. So, that's kind of one of the downfalls, but we can work from anywhere using this software that's out there. So it's user friendly, at least for us. It takes a little bit of time to get used to, but you can work through it. As far as taxes go, I always tell you, you never go it alone. Don't file your own taxes. Use a tax professional. Use an enrolled agent, somebody licensed to do your taxes. Have a consultant. Have somebody that you can consider a friend that you can call to get tax advice when things happen in your business, in your life, whether it's new child, divorce, marriage, death, whatever it may be. Having that person that you can rely on to consult with is well worth it. Not just when you're running a business, but in all walks and things in your life. Sometimes do it yourself is not the right way to do it. As my wife tells me, we have an electrical problem, we call the electrician. We have a plumbing problem, we call the plumber. When we have taxes to do, we rely on us, the enrolled agents, CPAs, the licensed people that are licensed to work and do this kind of stuff. It makes your life easier. And having somebody that you've been working with for a number of years sometimes is even easier. Our clients have been with us for 3, 4, 5, 10 years. And we try to make their life easier. I have clients that have been with me over 20 years to make their life, their businesses easier. So how do you get started working with Trucker Tax Tools Taxation Solutions? Hey, you give us a call, 877-966-2477. Again, 877-966-2477. We put you on the low-cost bookkeeping plan. We'll get you started. We'll get working with you, saving you money on your taxes and finding all those deductions. Listen, follow the instructions. Let us help you. Hey, one of the most wonderful things that I get to do is be on here every Monday at 10 a.m. at taxtalkforyou.com on W4CY Radio. Never miss an episode. Go to Facebook, go to Instagram, click follow and share. truckertaxtools.com, taxationsolutions.net. But go to taxtalk4u.com. Follow us over there. Share it with your friends and join us every Monday right here, 10 a.m. Eastern Time on W4CY Radio. Hey, we'll see you next week. You have a God-blessed and glorious week. Excel at what you do. Have fun at what you do. But be here every Monday, 10 a.m. at taxtalk4u.com. Thank you. Have a God-blessed week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.